South Auckland's property market has crashed 22.9% from its peak. That's nearly a quarter of the value just gone. Papakura, Manukau, Ōtara, Māngere. They're home to tens of thousands of Kiwi families who've just watched their biggest investment crater. And here's what's really gutting about this. We're talking about areas where the median home in Papakura has dropped from over $1 million to $780,804. Manukau down to $975,318. Papatoetoe sitting at $806,100. But those are just numbers on a screen until you realize what they mean. If you bought at the peak with a 20% deposit, you've lost your entire deposit, you're in negative equity. I've been tracking Auckland's property market for years now, and what's happening in South Auckland is different from what we're seeing in the rest of the city. North Shore down 18.4%. Still bad, but it's held up better. But South Auckland, where working families bought in hoping for stability, they're leading Auckland's decline. And look, there's this area that really tells the story. Ōtara, the heart of South Auckland, where entire streets of former state houses have seen values plummet. Families who bought in 2021 and 2022 thinking they were finally getting on the property ladder now find themselves trapped in homes worth far less than what they paid. So if you own property in South Auckland, if you're thinking about buying there because prices have come down, or if you're just trying to understand what's really happening to New Zealand's largest city, this is critical. Because while Auckland Mayor Wayne Brown is dealing with a budget crisis, proposing a 7.9% rates increase to cover the City Rail link costs, South Auckland homeowners are facing their own financial emergency that nobody's talking about loudly enough. Now here's the thing that keeps nagging at me. The Reserve Bank has slashed interest rates from 5.5% all the way down to 2.25%. That's the most aggressive easing we've seen in years. Mortgage rates are falling. First home buyers are getting back into the market nationally. And yet South Auckland is still dropping, quarter after quarter. That tells you something fundamental has shifted. And we need to understand exactly what that means for anyone with money tied up in this part of Auckland. So in this video, we're going to break down exactly what's happened in South Auckland's property market over the past 3 years. We'll dig into the specific suburbs that have been absolutely hammered. We'll look at why South Auckland is underperforming the rest of Auckland, which is itself underperforming the rest of the country. And most critically, we'll tackle the question everyone's asking. Is this the bottom? Or should South Auckland homeowners brace for more losses? 3 things we're covering today. First, the raw data, suburb by suburb, dollar by dollar from peak to present. Second, the forces driving South Auckland's outsized decline that most analysts are missing. And third, what this means for your decisions in 2026. Whether you're holding, selling, or considering buying into what might look like a bargain. Let's get into it. Right, so let's start with the numbers because they paint a pretty stark picture. Auckland overall peaked in January 2022. That was the top of the market, the absolute high point after the pandemic boom. From that peak to October 2025, Auckland values have fallen 21.4%. By some measurements, looking at December 2025 data, we're talking 22.9% down across the entire Auckland region. That's the worst performing major centre in New Zealand. But when you zoom in on South Auckland, the picture gets worse. Papakura, which sits at the southern edge of the metropolitan area, has crashed 22.5% from peak. The current median value there is $780,804. Manukau, which encompasses a huge chunk of South Auckland, is down 21.9%. Current median, $975,318. Now let's put that in real money. If you bought the median home in Papakura at the peak for, say, $1,008,000, you've lost about $227,000 in equity. That's not a paper loss you can ignore. That's your deposit. That's your financial buffer. That's potentially your retirement savings if you were planning to downsize. But it gets worse when you look at the quarterly data from late 2025. In the 3 months to October, Papakura fell another 3.5%. That was the worst quarterly performance in all of Auckland. Manukau dropped 3.4%, second worst. These aren't markets that are stabilizing. They're still actively falling. And when you look at suburbs like Ōtara and Māngere, Areas that absorbed huge numbers of Pacific Island families and first-home buyers during the boom, the human cost becomes even clearer. These are communities where home ownership was supposed to be the pathway to financial security. Instead, it's become a financial trap. So the obvious question is, why South Auckland? Why are its suburbs facing the steepest crash than other parts of the city? Auckland overall is struggling, no question. The entire region is down roughly 22% from peak. But when you break it down by area, you see some really telling patterns. While others started recovering, South Auckland is consistently at the bottom of the rankings. There are a few forces at play here. First, affordability dynamics. South Auckland has historically been the most affordable part of Auckland, which is great for first home buyers, but it also means the properties there are more exposed when the economy weakens. When people lose their jobs or face financial pressure, the outer, more affordable suburbs get hit first. Second, demographics and employment. South Auckland has a higher proportion of families in blue-collar jobs: construction, transport, logistics, retail. These sectors have been absolutely smashed over the past 2 years. GDP contracted 0.9% in the June 2025 quarter. Unemployment is rising. When your job security is uncertain, you don't buy a house. And if you're struggling, you might be forced to sell, adding to inventory. Third, and this is crucial, South Auckland saw some of the strongest price growth during the boom. Papakura, Manukau. These areas had massive gains from 2019 to 2022. When you have that kind of rapid appreciation, you also tend to have the sharpest corrections. It's almost like gravity. What goes up fast comes down hard. But there's another factor that doesn't get talked about enough: infrastructure and perception. South Auckland has been dealing with flooding issues, infrastructure backlogs, and a perception, fair or not, that it's less desirable than other parts of Auckland. During the boom, people overlooked these issues because prices were rising and FOMO was in full effect. Now that the market's turned, those concerns are front and centre. And look at what's happening with the Auckland Council budget. Mayor Wayne Brown is proposing a 7.9% rates increase for 2026 to 2027. That's on top of previous increases. The City Rail link alone is costing ratepayers $235 million annually. For South Auckland families already dealing with mortgage stress and falling property values, another rates hike is just salt in the wound. Let's talk about what this crash actually means for the people living through it. Imagine you're a family who bought in Papakura in early 2022. You put down a 20% deposit, let's say $200,000, on a $1 million home. Your mortgage was $800,000. Fast forward to today and your home is worth maybe $780,000. You're underwater, you owe more than the house is worth. If you need to sell, maybe you're relocating for work, maybe you've split up with your partner, maybe you just can't afford the mortgage anymore, you're looking at bringing cash to the settlement table. You'd need to find $20,000 just to clear the mortgage, plus real estate fees, legal costs. For most families, that's impossible. Even if you put down a bigger deposit, say 30%, you've still watched $227,000 of your equity evaporate. That's years of savings. That's the nest egg you were counting on. And here's where the psychological toll starts to really weigh. According to the research data, close to 40% of fixed-rate mortgages were due to reprice in the December 2025 and March 2026 quarters. Some people are getting relief. Mortgage rates have come down from their 2023 peaks. But others who fixed at really low rates back in 2020 or 2021 are now rolling onto rates that, even with the Reserve Bank cuts, are significantly higher than what they were paying. So you've got this double hit. Your property value has crashed and your mortgage payments might have gone up. That's a financial vice that's incredibly hard to escape. I've been hearing stories through real estate contacts, through community groups, of families in South Auckland who feel completely trapped. They can't sell without taking a massive loss. They can't refinance because their loan-to-value ratio is blown out. They're just stuck, making payments on a depreciating asset, hoping against hope that this is the bottom. And there's this broader sense of betrayal, I think. A lot of people in South Auckland bought into the Kiwi dream. Work hard, buy a house, build wealth for your family. Property was supposed to be the safe bet. 7% returns annually, that's what the historical data showed. And now, they're watching that dream slip away, month by month, valuation by valuation. So let's talk about what's really driving this and where we go from here. The Reserve Bank slashed rates from 5.5% to 2.25%, 325 basis points of cuts, yet South Auckland keeps falling. Why? Because banks aren't passing on the full benefit. Average mortgage yields are still around 5.4%. They're offering cashbacks instead of rate cuts, which doesn't fix the fundamental affordability problem. Then there's the economic reality. GDP contracted 0.9% in June. Unemployment is rising in exactly the sectors that employ South Auckland: construction, transport, logistics. Net migration has hit 2.5-year lows, reducing housing demand, and inventory keeps building with not enough buyers. So is this the bottom? Most economists, Kiwi Bank, ANZ, ASB, forecast modest 3 to 5% national growth in 2026. But those forecasts assume unemployment stabilizes and no global shocks. For South Auckland specifically, the structural issues don't vanish overnight. Employment vulnerability, infrastructure gaps, perception challenges, these take time to shift. Here's my read. Another 3 to 5% downside over the next 6 months is possible in some South Auckland suburbs, but a second 20% crash, unlikely. New Zealand has a housing shortage. Auckland needs tens of thousands more homes. Supply and demand fundamentals still matter. The worst is probably behind us, but the recovery will be slow and uneven. All right, let's bring this together. South Auckland has experienced one of the sharpest property crashes in New Zealand. Papakura down 22.5%, Manukau down 21.9%. For the median homeowner in Papakura, that's $227,000 in lost equity. These aren't just statistics, these are life-changing financial hits for working Kiwi families. The crash is being driven by a combination of factors: South Auckland's exposure to economic weakness, employment vulnerability in blue-collar sectors, high inventory levels, and the legacy of rapid price appreciation during the pandemic boom. Even with aggressive interest rate cuts from the Reserve Bank, prices continue to fall because the underlying economic conditions haven't recovered. Looking ahead, we're probably close to the bottom, but close could still mean another 6 months of weakness. If you're holding property in South Auckland, you need to be realistic. It might take several years to get back to 2022 peak values. If you're thinking about buying, there may be opportunities emerging, but you need to be very clear-eyed about the risks. Don't assume we've hit the bottom just because prices have already fallen a lot. And here's my final thought on this. This crash, painful as it is for those going through it, might actually be a necessary correction. Auckland's property market had become completely disconnected from what people could actually afford. Homes costing 11 times median household income, that's not sustainable, that's not healthy for society. So while nobody wants to lose $200,000 in equity, maybe this rebalancing brings us back to a market where young families, where first-time buyers in South Auckland, can actually afford to get on the ladder without mortgaging their entire future. That's the situation in South Auckland. That's what the data tells us. And that's what families across Papakura, Manukau, and the broader South are dealing with right now. If this breakdown helped you see what's really happening, hit the like button, smash that subscribe button, and turn on notifications. We're tracking Auckland's property market every month as it unfolds. Drop a comment below if you're in South Auckland. I genuinely want to hear what you're seeing on the ground, what your experience has been. And if this was valuable, share it with someone who needs this information. Thanks for watching. I'll see you in the next report.